Today's lecture, we're going to be focusing on waiver of premium. Waiver of premium is a very, very popular rider. We call it a rider because actually it's added on to a base policy of some sort. In other words, you can't buy this by sort of as a standalone. It's actually added on to an insurance policy. So if you buy term insurance, you buy whole life, whatever, you add this as a rider onto that particular plan. What the waiver of premium, the definition of waiver of premium basically is that if you become disabled and therefore have no gainful occupation of any kind, after a period of 3 to 6 months, depending on the insurance company, most of the time it's 3 months, what the insurance company will do, because you're not gainfully employed, they will in fact waive all future premiums. So if you're paying $100 a month, they will stop taking $100 a month from your bank account basically, and they'll pick up that $100 for as long as you're actually disabled. Not only will they stop taking money out of your bank account, in other words, all future premiums will be paid by the company, but also they'll refund you back the last 3 months, let's say, of premium that you shouldn't have paid. So basically, what it's saying is that it is really actually waived right from the first dollar, you might say, but you do have a waiting period. There are 3 different kinds of waiver of premiums. So the definition is the same regardless of which one of these you get. The definition is still the same. Basically, you've been disabled. No income of any sort, no gainful occupation. We will waive the premium after 3 months or 6 months, depending on the company. So the definition is the same. However, waiver of premium, this particular one is on yourself. In other words, this is what they call personal insurance. So I buy a term insurance policy on myself, and I buy a waiver of premium on myself. I become disabled because I'm actually paying the premium. Then that premium will be waived. Okay. Payer waiver is really third-party insurance. In other words, I bought a policy on somebody else. So, for example, I bought it on my spouse, let's say, but I'm the one that actually is paying. In other words, I'm the payor. So the waiver of premium will be on my life, even though the life insured is my spouse, but the waiver of premium will actually be on me. So therefore, it's called payer waiver. Again, same definition. It all depends on who's actually paying the premium. The last one is what we call the parent waiver. And this is a situation where, in actual fact, the parent is buying a life insurance policy on their child. Once again, the child is the life insured. The parent is actually the owner, and therefore the waiver is really on, once again, the payor. In other words, the parent is actually paying the premium. So the parent becomes disabled, unable to no gainful occupation. The premium will cease after that 3 to 6 month period of time.